Welcome guys to today's teaching. This is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe. Okay, so this is our series on live trade experience, and in today's teaching we are going to be looking at last week Friday of the previous week, okay, which is the last trading day of the previous week. And actually I promised us an advanced smart money series, and that is going to be the next video right after this video. Okay, so I'm already working on that, and it's a lot harder than I anticipated, and but I'm actually going to deliver it right after this video. The next series, the next episode coming up is going to be the smart money advance series. Okay, and the series of the smart money advance course is going to be different from the live trade experience. Okay, so the live trade experience is actually a series on its own. Okay, so but the smart money is going to be different from it. Okay, so in today's teaching I'm going to be talking about counter trend trade opportunities, live trade experience series. Okay, so let's get down to business, and remember our Telegram link is always attached to the videos in the comments in the description box. Okay, so please, if you want to join our Telegram group, you can click on the link in the description box. Okay, so that's actually where I keep the guys. I update them, before making any videos online. I always share it with the community in the Telegram group. Okay, and that's where I also share my live chats, and we talked about tradings, and we share our opinions. Okay, so it's actually free, you can join it. The link is on the description box. Okay, so with that said and done, let's get down to today's business. Okay, now this is the Australian dollar on the weekly time frame, right? Remember, we always start our analysis from the weekly time frame. To me, I always start mine from the weekly time frame. Okay, you can start from the daily, it doesn't really matter, and I just prefer, rather I love using the weekly time frame. Okay, so now this is the previous week. Okay, and in our last video I talked about this fair value gap that we traded off, and I talked about this old low being reached for. Okay, so which is what we actually saw happened the previous week, or actually happened this week. Okay, we are still on the weekend, we are still on Saturday, and as we can see, the old low has already been taken out. Okay, now what we have learned so far, price is always reaching for one of two things. Okay, price is always reaching for liquidity, or is either reaching for imbalance, right? So I'm looking at this imbalance right here. Okay, as a target that price is reaching for, and we also have another and probably an old low down here. Okay, so I'm actually just anticipating this being reached for. Okay, price can do whatever it wants to do, right? So that is one thing I actually learned for a while now. Okay, you can even if you have determined your bias, even when you determine your bias, you should not try to force price to do what you want. Okay, you should always allow price to do its thing and be ready. It's more like preparing for it's more like getting your bias right and preparing for the worst, or something like that. Okay, I don't really know how to put it, but price is just going to do whatever it wants to do at the end of the day. Okay, so now with that being said, looking for the forward to this new week, reaching for this imbalance, right? Reaching for this imbalance. Okay, and if it wants to expand lower, the next target would be to reach for this imbalance as well, and probably this old low. Okay, so that is just that I'm still bearish. That is what I'm trying to say in essence. Okay, so now we have the daily time frame right here. Okay, so now looking at the daily range, we have this old high to this old low, right? So this was the current trading range we were looking at before this last 2 days of the previous week, right? So we had this, I talked about this fair value gap, right? And as you can see, we reacted off it, and the movement was huge. Okay, so I'm actually going to talk about this last trading day. Okay, I'm going to talk about on Friday, and let's just see how it goes. Okay, alright, so now I've decided to add something extra to my, to my analysis, and this is known as the intermarket relationship. Also, I don't normally use a benchmark when doing my analysis, but I've seen it fit, and you know I thought I would it should be it could make things easier, and reduce my works, reduce the stress, or hear about something like that. I just feel like, okay, I should add this benchmark. Okay, so I'm currently looking at intermarket relationship. Okay, so this is the dollar index, right? So remember, when we are currently on a risk off market scenario. Okay, in other words, the dollar is currently bullish. Okay, and if the dollar is bullish, if money is being moved into the dollar, that means money is being removed from other foreign assets. Okay, so whatever that is paid against the dollar is going to be bearish. Okay, it's going to be inversely correlated with the dollar index price movement. Okay, so now we're having a bullish uh, uh, US dollar. Okay, we're having a bullish US dollar, right? So all foreign assets should be bearish. Okay, so which is what we can see here, right? So now, looking at the dollar index, I was not really seeing much of what we are reaching for prior to this relatively equal lows that has already been taken out. Okay, so now, even looking at it from the daily time frame, I can see this is just a one hell of a movement, right? And we had this range which has already been broken to the upside. Okay, so yeah, I'm not really planning on trading it. I'm just looking at it as a, as a benchmark. Okay, I'm just looking at it as a measurement, to measure the move of my, my foreign of other asset class. Okay, so now I decided to go up, since I wasn't really see much details on the weekly time frame. I decided to take it up a bit, and look at it from the monthly perspective. Okay, so this is the US dollar index on the monthly time frame. Okay, so now this this tells a little story about the dollar actually. So this explained a little bit of what was actually going on the dollar index to me. Okay, so prior to, I think it's about 2003. Okay, prior to 2003, the dollar index, as you can see, had been trending lower. Okay, so this was a risk off scenario, a risk on scenario. Okay, in other words, the dollar was very much bearish from 2003 to 2009. Okay, if I'm not mistaken. So we were having a risk on scenario from 2003 to 2009. Okay, which the dollar was obviously bearish, right? So we took out an old low right here, and the dollar stopped being bearish uh, from the year 2012, if I'm not mistaken, 2012, which is actually where it broke structure to the upside. Okay, so now from 2012, between 2012 to now, the dollar has been on a risk off scenario. Okay, although it has been moving up and down, we have currently broken structure to the upside. Okay, so this is actually a break of structure, right? So now, looking at this previous range from when the market started falling off. Okay, you can see this range wasn't filled wasn't filled efficiently. Okay, so this is a liquidity void. Okay, and this is one of ICT's concepts that we are going to talk about on the smart money advanced series. Okay, we are going to talk about liquidity voids, we're going to talk about fair value gaps, we're going to talk about other blocks and the rest. Okay, so this is a liquidity void, right? So we are anticipating price to come at a certain time to fill this up. Okay, so now, looking at this range from here, from this high to this low, you can see that price never reached for equilibrium. Okay, so this is set side inefficiency. Okay, by setting efficiency. Okay, so but now looking at this range, um this you can see price has just broken structure. Okay, so what these have actually shown to me is that it's more like a long-term uh trade. Okay, this is like a long-term trade, and this is more like done by position traders. Okay, so now I'm anticipating the movement of the USD in number of months to come. Okay, in other words, I'm expecting the dollar index to be bullish. Okay, for certain periods of months. I don't know how long it's going to take, but I have a target in mind that the dollar index should be bullish until we get above this old high and probably into this fair value gap. Okay, so it's just an analysis. Okay, I could be wrong because I've already anticipated and I'm preparing for the worst. Okay, so I'm preparing for the worst to happen, and that is one thing you should do. Okay, that is one thing as a trader you should have. You, even when you are determine your bias, you should always anticipate price to do what it wants to do. Okay, price could actually reverse from this spot and start and resume going lower. Okay, so this could actually, because this is more like a single price leg. Okay, so looking at this range, from this range to this low right now, we are currently above equilibrium. If I'm not mistaken, if I'm not mistaken, we should be currently above equilibrium right here. So equilibrium price should be somewhere around here. Okay, so we are in premium right now. Okay, so now price is, so looking at this as a single price leg, we are currently above equilibrium. Okay, so I'm actually looking at this range. Okay, I'm actually looking at this range from this high to this low. Okay, so now price offered only sell side liquidity here. Okay, so there was not enough buying in this specific area, so this is referred to as liquidity void. Okay, we are going to talk about that in the advanced money series. Okay, so now I'm expecting price to reach for this as an internal range liquidity. So between this high to this low, this high is simply an internal range liquidity. Okay, so price, I'm expecting price to reach for this and probably into this fair value gap. Okay, so now, and remember, this is the monthly time frame. Okay, so if I'm expecting a long-term bullish uh dollar, long-term bullish dollar. Okay, if I'm expecting a long-term US dollar currency index, okay, I'm expecting I should be seeing some long-term bearish foreign assets. Okay, so remember, this is just my analysis, and I'm just going to be watching price to do what it knows how to do best. Okay, so price is just going to be price, and it's not going to be more like my will be done. Okay, it's going to be like the price, the markets will be done. Okay, so that's just how the business of trading is. Okay, so now that is just what I'm expecting on the dollar index. Okay, so let's get down to today's business. With that being said, okay, so let's get out into the business. So this is on Fridays, the previous week uh price action. Okay, so I have a London Q zone and my New York Q zone right here. Okay, so now this is the New York launch hour. This is the New York launch hour. Okay, so now I want you to remember my bias is still bearish. Okay, so remember my bias is, my initial bias was bearish. Okay, but that doesn't mean I shouldn't look for counter trend opportunities. Okay, so I'm just going to say this real quick. Okay, if you are, let's say you are not, you are a newbie. Okay, you are new at this, at counter trade opportunities, I would advise you take them on the demo. Okay, I'm not actually advising you as a financial advisor to take live trades because of watching this trade results. Okay, trade results can differ, and I'm not a financial advisor. I'm just saying you should probably backtest this on a demo account. Okay, backtest this until you are sure enough, and make your own decision of if you want to go live, uh to go on a live trade with it. Okay, go on a live account with it. Okay, so now we have opening price right here. This is the New York midnight opening price. This is my London section opening price, right? So remember, I'm bearish and I'm anticipating a run on buy side liquidity, which is obviously what we have right here, as you can see. So this is the first swing guy prior to London opening, right? London section opening. Okay, so now I want you to pay a close attention. This is a 1 minute time frame. Okay, so I want you to pay a close attention to these consolidations. Okay, I'm going to talk about the importance of consolidation on the advanced series. Okay, so we have this a minor consolidation. Okay, although we had a minor breakout, then we had a reversal, then the London session opening, right? London Q zone opening. Then we had this drop shift in structure. There was no old high taken out, right? So then we had this consolidation again. Okay, so we have two relatively equal lows consolidation. Okay, so now then we had a breakout once more, then a move above the old high, okay, prior to London Q zone opening. Okay, so now I went in and started looking for an entry right here when we had this move. Okay, so I probably got my first entry when we had this shift in market structure, and I got in right there. Okay, I got in right here. So as you can see, I lost about 5 pips right here. Okay, so I was taking out, and this is one other major thing in trading. Okay, the thing is that, are you confident enough to go into to take another entry if you had a first loss? Okay, let's say you just pull up your chart for the day and your first setup uh, played out to be a loss. Okay, so the question is that, are you confident enough to take a second entry, uh, being that your first entry resulted out in loss? Okay, so that is something you have to build over time. Okay, it's not going to be easy, your first trade ever for the day coming out as a loss, and there, trust me, there's going to be emotion all over the place, and there's going to be fears, and it's not actually easy. Okay, but you have to learn to overcome those fears. That's why we advise on always practicing on the paper trading account. Okay, so now we had this move and price was choppy somehow, and as you can see, we are consolidating, right? Then we had this move. Okay, so this was what actually grabbed my attention. We had this huge displacement, and we had this fair value gap. Okay, so I got my entry right there. Okay, I got my entry right there. All right, so now I got my entry right there, and my attention was quickly drawn to this consolidation. Okay, so what is probably resting above this consolidation right now is sell stops. Okay, sell side liquidity, right? Then looking at this previous range. Okay, viewing this as a single price move, as a single price leg, sorry. Okay, looking at this range and below the 50% level. Okay, we had this little fair value gap, and of course internal range liquidity, sell stop resting below this old low. Okay, so this was where I actually took off my partials. Okay, so I took first TP right there, took partials right there. Okay, so I was hoping to go for this low, but unfortunately I got stopped out. Okay, then I went to sideline. Then came the New York opening. Okay, then came the New York opening. So this is my New York opening price, New York Q zone opening price right here. Okay, so now join that out in time. Remember, my bias was bullish, was bearish, sorry, my bias is bearish, but so I was actually expecting a move above this previous old high to take out liquidity and take me to the other side. Okay, so now, but what I actually got instead was this. So I pictured this. We had this old low right below the opening price. Okay, so we had a move below that. Okay, then we had a shift in structure prior to that was after the New York zone opening. Okay, we had this shift in structure, not much. Okay, then we had this minor consolidation. We had another break of structure. Then after this, I saw this opening. This, what's it called, fair value gap, right? So this is a fair value gap. We had a run on liquidity, a shift in structure, and a fair value gap. Okay, so I was like, okay, I was targeting these highs, and if we are probably going to go short from here, I should probably look for anticipate an entry, and get out right there, and probably look for a short position, right? So now I had this in mind, and of course we had this other block. Okay, so we had this other block, this series of down candle before this up move, right? We had this other block and a fair value gap. Okay, so I immediately went down to my lower time frame. Okay, now I got down to the lower time frame, and price was just sketchy. Okay, price was just sketching, and dropped below this, dropped into the 15-minute fair value gap. Okay, so this is the far end of the 15-minute fair value gap. The top of 15-minute fair value gap on the top. Okay, so now I was actually looking for an imbalance right here, but price was just sketchy, and I took my mind off the fair value gap and I looked for something else. Okay, so now this is how I got my entry. Okay, so this right here is a breaker block. Okay, so I got my entry on a breaker block. So what is a breaker block? A breaker block is actually the last up candle. For a bullish breaker block, that will be the last up candle before a run on liquidity. Okay, so we had the last up candle right here. I will zoom in a minute. Okay, we had the last up close candle before a run on this sell side liquidity. Okay, taking out the sell stop that are probably resting below this, taking it out the other way. So when price came back to it, okay, so that was where I got my entry. So I got my entry right there, and I got a 8 pip stop loss below this old low, right? So and my target in mind was actually this, as you can see, price deliver it. So I was just done for the day. Okay, I was just done for the day. I already had enough for the day because I wasn't really feeling fine, and I probably feel uh, stressed out. Okay, so I took out my own position here, and I wasn't really concerned with the other parts of the day, what happened thereafter. Okay, so now taking a closer look at this fair value gap, this breaker block. Okay, we're actually going to talk about this in the smart money advanced series. Okay, we're going to talk about breaker blocks, other blocks, and the rest. Okay, so now a breaker block, a bullish breaker block is simply the last up close candle before a run on liquidity. Okay, as you can see, this is the last up close candle before this run on liquidity, taking out the buy side, the sell side liquidity, and taking the other turn. So I actually got my entry when price came back to it. Okay, so when price came back to mitigate it, that's the process of price coming back to this breaker block is known as mitigation. Okay, so now what actually happened here is that smart money uh, sacrifice some positions to take out, they sold this market downward. So they sold here, smart money sold here, okay, to take out this buy. They sold to these buyers resting below here, right? So now when price went the other direction, their order that was left open here was in loss, was underwater. Okay, they were actually in loss right here. Okay, so now the thing is that smart money are not actually like, they are not like uh they don't take losses. Okay, they actually take losses. They are positions they sacrifice for other positions. Okay, there are times they are going to make sacrifice like this. Okay, so in order to take out the, in order to go long, they have to have some people they are going to buy from, right? So now they sold to these guys, they sold off, they sold the market, and the market dropped aggressively. Okay, they sold the market and the market dropped aggressively. Now the stop loss of those that are resting below this buy side are now sellers. Okay, so at the same time they were selling and they were buying they were buying the stops, and actually those that had their sell stops. Okay, so this position was left open when price expanded higher. Okay, so the position that they actually sold here to get the market to take out and to activate the stops of those that was resting below this old low, the order was left open. Okay, so the order was left open and price expanded higher. Okay, so now we looked at this, we draw it out in time, because smart money are actually going to come back and mitigate those losses. They are going to come back and mitigate the losses here. Okay, the losses they made here, and probably take a new entry. Okay, so that was what I saw, and that was what I took this entry, this setup on. Okay, so when smart money came back to this breaker block to mitigate the open position that was in loss here. Okay, yeah, so that was when I took this entry, and I could have also taken it on this. Okay, we had a movement down, right? We had a movement below this previous low. Okay, creating a lower swing low and the shift in market structure, right? And the shift in market structure, then we had this break of structure and this fair value gap created. Okay, so we had this move in. This would have been my entry, but I have already gotten my entry. I was already in right here when price, and you can see that that also happened as soon as price traded into the breaker block. Then we had a shift in structure. Okay, uh price didn't shift in structure until we got down to this breaker block. Okay, so you can see that smart money allowed price to drop down so that they can take out the positions, their open position that was in losses here. Okay, they had to minimize the loss. Okay, they couldn't take it out up here because that is a huge loss. That's a huge money being you know being lost to the market, right? So that was a lot of money in losses, right? So they had to wait for price to come down to a discount aspect. Okay, so looking at this range from here to here, you notice that we are below, that was below the 50% level. Okay, so they had to take out the loss and place a new buy. As you can see, price went up very, 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 the movement was strong. Okay, so now we are these are some of the concepts you are going to talk about on the smart money series. Okay, so I'm surely going to start making the smart money series now. Okay, and I do hope we learn one or two things from it. Okay, so now that brings us to the end of this video. Okay, so please, if you have learn one or two things from this video, like this video, do well to leave a comment. Okay, and remember, we have our telegram group link on the description box. Okay, so please and please, if you have been following us for some times now and you haven't really subscribed to this channel, please, we are begging you, please do well to subscribe to this channel. Okay, it won't take, I promise you, it's not going to take more than 5 seconds of your time. And make sure to turn on the notification bell, okay, so that you get notified once we upload our weekly content. Okay, so I hope every one of us is excited about the smart money advance series. Okay, so actually going to see you guys on the first episode. Okay, so do have a great weekend and a great trading week ahead. See you guys in the next video.